Big news today, Silicon Valley Bank is collapsing. It's going to be the second biggest bank collapse in the United States. Now listen, there's a lot of other people creating content on this that are driving fear and anxiety. That's not going to be me. And I just made a bunch of videos that go into the details to very simply explain what's going on and how it impacts you. Right now, I'm going to focus on why financial independence and having an emergency fund is what you need. I'm Rizek, CPA certified financial planner, and I want to help you become financially independent and, more than anything, confident with your money. So right now, there's a lot of startup VC-backed companies as well as private equity-backed companies that use Silicon Valley Bank. And there's a number of tech companies that are likely going to be unable to make payroll. Now listen, there's still FDIC insurance coverage on accounts, but there's limits on some of those accounts. And many businesses have account balances significantly more than those FDIC limits. So what does that mean if you're an employee whose employer uses Silicon Valley Bank? Let me share it with you. For starters, I hope you have an emergency fund yourself. That will allow you to weather the storm. But if you're living paycheck to paycheck, I feel sorry for you, because it might be a while before things come straight. Now, the FDIC and regulators have said that they're going to go in on Monday and start making things straight. But it might be a while before some serious liquidity comes to those businesses that banked with SVB. As always, you just want to be sure that you have enough emergency funds on hand to withstand at least a couple months. Now, there's a number of places where you can keep your emergency fund. Of course, cash under the mattress is one, high yield savings account, as well as just your regular savings and checking account, which I'm typically not a fan of for that emergency fund type of money. There's also CDs, certificates of deposit, as well as money market funds. Not a recommendation, but just some options for you to think about. Of course, this is education. So here's the second lesson we can learn from what's going on with Silicon Valley Bank. Diversification. The stock price has lost over 60% in just 2 days of trading. And in fact, today, Friday, the stock market didn't trade SVB. So it remains to be seen what that price will be. But the point is, if you are picking individual stocks, it comes with a lot of risk. And listen, this morning, I read the disclosures, the 10K annual filing, couple hundred pages from Silicon Valley Bank that they file with the SEC. And in the disclosures, it talks about some of the accounting practices and some of the risks that they were facing with the Federal Reserve. But nobody in the stock market called it until it was too late. When it comes to investing, you want to be diversified and invest in a lot of different companies. For me, I love to use index funds. Broad diversification, lots of assets and asset types, and all at a low cost. So please make sure you have an emergency fund and you're diversified. I'm Rizek, CPA certified financial planner. Follow me for more tips.